Hello everyone, I am here with a new trading strategy education. The trading style you will learn today is actually not a model that I use much. But I have seen that many investors who want to trade on all exchanges frequently use indicators that give buy, sell signals. Although these types of indicators are very practical, they definitely need to be filtered together with other momentum or volatility measuring indicators. Because of the intense requests I received, I tried to prepare a video on how to create a strategy with such an indicator. Of course, our video will be directed towards beginner traders rather than advanced traders, and they will be able to manage their risks without stress by making profits with this style of trading. First, let's find the indicators and adjust their settings. If you watch the video without skipping, in the second part, I will try to teach a slightly different style, and at least you will have two very simple and profitable options in your mind. Of course, before we start, I will ask you to press the like button, subscribe if you haven't already, and turn on the notification bell so that you can be informed of all the content instantly. Thank you in advance. Let's get started. Now let's move on to the trading rules for a short position. Rule 1. The Fibonacci indicator must give a sell signal. Rule 2. A green Fibonacci candlestick must close below the moving average line. Rule 3. The stop loss level must be above the last swing. The target can be set statically at 1-to-1 for scalpers, or adjusted to a 1-to-1.5 or 1-to-2 risk-reward ratio according to the trader's preference. Apart from these, a beginner trader can be very impatient and excited in trades, so she can completely close the short position with the closing of the first green candlestick she sees. Of course, this situation may result in lower profit ratios, but a beginner trader can protect herself from very high losses in this way. Now I will adjust the profit ratio based on the closing of the candlestick in the opposite direction of the trend. You can determine your own risk-reward level. Now let's look at some trade examples based on the rules I have explained consecutively. My friends, now I will present the strategy with a slight modification using Heikin-Ashi candlesticks again. In this model, we remove the moving average line and add the RSI indicator instead. I will also display the settings on the screen now. Our strategy in this form is also very simple. When the RSI line crosses above the 60 parameter and we see a green Heikin-Ashi candlestick, we will enter a long position. When the RSI line crosses below the 40 parameter and we see a red Heikin-Ashi candlestick, we will enter a short position. This time, the stop-loss level will vary depending on the shape of the candlestick we entered the position. If there is a pin on the opposite side of the candlestick we entered a long position, the stop-loss level should be placed above the previous candlestick, or just above the candlestick we entered the position if there is no pin in the opposite direction. For short positions, it will be the opposite, that's all. As you can see, we can also enter trades very frequently with this strategy style. Please watch it without skipping to fully understand. If you had any questions, please write them in the comments section. I read all the comments and reply to them. I showed you a few examples here, but I tested this strategy for a much longer time period. As a result of long-term testing, I reached a 56% win rate in the trading style of the first part of the video. The maximum win rate was 44%. The strategy in the second part of the video seems quite suitable for a novice trader, of course. Risk management is entirely up to the individual's preference. I wish you all abundant profits. Goodbye for now.